Hi, it's John Kelly. In this module, we are going to discuss group audits. And as always, we want to be efficient and effective, follow professional standards, and document what we have done properly. Now, I don't intend to do a detailed review of all of the requirements of this section. There are rather a lot. And it's not that common that we have a group audit circumstance. And the section, if you look at it from a long way back, just mostly restates and perhaps extends a bit what the requirements of GAS would normally be. But there's a great big but here, and we need to talk about that. And the but is that I find often that when I'm talking to my colleagues, they go, "What do you mean that's a group audit?" And I have to figure or follow the group audit standards. And so often the section applies when we don't expect it to apply. So that's the first thing we have to be careful about and be aware of. The other thing is there are some added things and requirements and procedures that we have to do. So if we are doing a group audit, we need to make sure that we've covered those added points. And there's a specific documentation requirement, and I always worry that documentation is becoming more important than doing the work actually, but this is a good place where a checklist can remind us of all the various steps that we are supposed to do when we're doing a group audit. So let's just run through some circumstances and see whether or not we're in a situation where we're doing a group audit and we need to follow Section 600. And so, for instance, we're a small firm, we have an office in one city, and we get another firm to do an inventory count in another city. Now, they're not really doing an audit, so this probably isn't going to be under the requirements of a group audit, but the answer is that yes, it is, because we do need to communicate with the other firm. We do need to advise them of the things they need to do. We do need to consider whether they're independent of our client that they're doing the inventory count for, and check whether they follow professional ethics and all those things. So perhaps not all of the things are going to be relevant. We'll need to consider them all, but yes, we have to follow Section 600. So, second circumstance, we are a small firm. We have offices in 2 cities, and each office does work on a single client. And again, you say, well, it's not really a group audit because we're doing all the work, and I know there's one partner in our city that's in charge of the audit, and there's another partner in the other city that's helping out. So that's not really a group audit, right? And you can probably guess that no, it is a group audit. And yes, we do have to follow the requirements of Section 600, even though it's all our firm. We're doing the work in 2 different cities, 2 different partners are involved. It's a group audit. Follow the requirements. And I think by the time we get to the next one, we're a small firm. We have offices in 2 cities, and the first office is auditing the parent, and the second office is auditing the subsidiary. So there's a group engagement partner in the first city and another engagement partner for the subsidiary in the second city. And, you know, we need to coordinate and we need to understand. And it's our firm, so independence and professional ethics and things like that probably aren't as much of a concern as, say, if it was a firm in another country where you weren't quite sure what the rules they followed were and you needed to check that a little more closely. So the answer to this question is as well, yes. So yes, it's a group audit and follow the rules. Now the one that's obvious and that we all think of, we're a small firm, we have one office, we have a client that has a division or a subsidiary in another city or another country even, and we have to get another firm involved. That's clearly a group audit, and we're going to have to follow every single requirement is going to be relevant. So the answer is yes, of course. And a big firm with many offices, which each does part of a large office, that also we're going to find is a group audit. I'll put the answer up right away. So yes, it's a group audit. And yes, it may be more complicated. We may find that we need to deal with another language. You know, something's being done in a country that doesn't speak the language that we speak, and so that's going to make things more difficult. So if you're uncertain at all as to whether or not you're under the requirements of Section 600, be safe, assume you are, and follow the requirements. So it applies not only when another firm is engaged, that's the obvious one, but it can apply even when another office of the same firm is involved, and it often does. And so the issue then is, if you've missed it, well, you've missed all the required documentation. You may or may not have done all the things you were required to do, or most of the things you were required to do, but you're going to be deficient on documentation. So that's a problem. Now they have added some stuff, and all the normal stuff is there, and you say, well, why do they have to repeat it? And things are said like, well, there is a group engagement partner who has overall responsibility for the whole audit, just as the engagement partner in a not group audit has overall responsibility, so that's kind of the same. Acceptance and continuance applies, though if you think about it, if you have a parent with many subsidiaries and we're auditing all the subsidiaries, we have to think about acceptance and continuance criteria in the subsidiaries as well. Come up with an overall strategy and plan, of course. Calculate group materiality, yes. Respond to risks, of course. Consider subsequent events, of course. Get sufficient appropriate audit evidence, sure. And communicate with the client in the normal course, of course. But what's added? Well, the first thing is we have to consider the component auditor ethics, independence, and competence. Less of a concern, perhaps, if they're part of our own firm, but we still have to do it. We have to calculate component materiality and component performance materiality. And by component here, I mean each individual division or subsidiary of the company. The component is not cash or accounts receivable. The component is the entity that's being audited. We have to consider what the significant components are, the significant divisions are. And we also have to consider the audit of the consolidation process. And if you think about this, if you have a parent and a subsidiary, there very well could be goodwill in the consolidated financial statements, but that goodwill will not appear on the non-consolidated parent financial statements, nor will it appear on the subsidiary financial statements. That's something that's going to occur only when we consolidate. And there are issues surrounding goodwill impairment, for instance, and disclosure perhaps, that we will need to consider that pop up when we do consolidation. So important to consider the consolidation process. Second thing that's added is a communication protocol. We have to communicate with the component auditor, and the component auditor has to report back to us. And there are some specific things, like we want the component auditor to confirm that they will cooperate with us. We need to confirm that they follow an acceptable set of professional ethics and that they're independent. We'll need to tell them what materiality is and performance materiality, and how to deal with items that are going to be deemed trivial. We'll have to advise them of any risks that we're aware of, and ask the lead auditor. We will know who related parties are, and they may not, so we need to advise them of related parties. And then the component auditor is to report back, and I haven't included everything that's in paragraph 600.41 because there's a long list, but that's the list that the component auditor has to report back to us on, and we need to document both sets of communication and have them in our file. The other thing that's added, another kind of communication with the client, and we will communicate with management, entity, and group-wide issues, as well as all the other issues that we would normally communicate with management. And to those charged with governance, in addition to the items we would normally communicate, we would communicate an overview of work by entity. We would communicate an overview of how the group and component auditors work and work together. Hopefully this doesn't happen, but if there are any problems with a component auditor, we would tell those charged with governance. If there were any limitations on the audit, hopefully wouldn't. And of course, we'd advise them of fraud. And so documentation is going to be very important here. Everything that I've just talked about and a few more things need to be documented. We need to document an analysis of the components and the work we're going to do. We need to document the nature, timing, and extent of the work. And we need to document the communication back and forth with the component auditor. So this is a circumstance that we are not often in. So here's where having a more detailed checklist to remind us of all the detailed things we're supposed to do, because they're unfamiliar and we might forget. And there are a lot of requirements, so we need to be reminded of all of those and document all of that stuff. So, thanks for listening.